morning. We are coming to you this time for the first time from the offices of TSN in Louisville. I'm here with my partner, Renee Newsom, our managing partner here in the Louisville office. How are you doing, Renee? What's been new? How's your summer been?
For us, a lot of our summer actually has been full of college visits, football recruiting, and just kind of gearing up for the football season and back to school. So we do a lot. Our son is going to be a junior. Our older daughter is going to be a senior. So we've had some college visits and stuff. So it's exciting. But we're also pulling up in the 5th grade. Our youngest is in 5th grade. So we're kind of staggering that a little bit. We got the whole mix. That's right. Mix.
Yeah, I've got a senior myself, a sophomore. Gosh, it goes fast. But we had a blast this summer. We went out to California, continued hitting national parks. Got to visit my favorite national park, Yosemite. Beautiful. And then my son got to visit one of his best friends, a foreign exchange student from Denmark, and while he was there, we took our camper up through the Upper Peninsula of Michigan and toured the sites, went to Pictured Rocks, went to Mackinac Island. It was awesome. But one of the highlights for sure this summer was Pacer Mania. We went to the NBA Finals, first time since Reggie Miller's days. This one was really cool. And if you didn't follow it, there is a player, TJ McConnell, our backup point guard, who had the Pacers pulled it off and won. You could certainly have made a case for him to be Finals MVP. He's the backup to Halliburton, who went down in Game 7 with an Achilles injury, but this little scrappy point guard who maybe he's 5'10". I don't know. He's a tiny little guy.
But if he's 6 foot, I feel like that's an insult. I don't know. We should find out. Okay.
Well yeah.
Okay.
not that the roster is going to really
I know. No, that's
share
right.
the truth.
I know. That's right.
The reason I bring him up, I love the guy's heart, his grit, his teamsmanship, if that's a word, just an ultimate team player. But I read that he gave away his entire signing bonus from his most recent contract to help the homeless in Indianapolis, and I believe in Arizona as well. He played his college ball in Arizona. But $2 million. And again, this is not LeBron James with a $250 million contract giving away $2 million. This was a meaningful gift. And I love generous people, as Dave Ramsey would say. They make me smile. They make my eyes leap.
Yeah, they do.
And there's this passage of scripture that I just love, Proverbs 11:10. That says, when the righteous prosper, the city rejoices. And the reason I like that, in this culture, we see a lot of jealousy, a lot of envy. You know, you do well, I resent that. However, when you see huge acts of righteous generosity, how can you not cheer for that?
And be inspired, I think, just to see people do well, but then not just sort of hoard their wealth, right? But the feeling of sort of paying back, or kind of, there's kind of that phrase of remembering where you came from, right? Yes. And kind of pouring out into the community that built you to be who you are, and kind of where you've grown to successly, which is really exciting and inspiring.
I hope, TJ, if you're watching this, that would thrill me to death. Come be a client.
That's right.
But I am cheering for you to get the next huge contract.
Yes.
Because I love your generosity and your heart and how you steward your resources. It's an inspiration. And I pray that for all my clients. I pray that they would prosper so that they can steward well, be righteous, give back.
Huge generosity. And just a quick story to share. Even locally, we had that happen. And actually, my daughter was a beneficiary of that in the community for the school that she cheers at. I don't know if you remember that story. They were trying to go to nationals. They were really struggling as a team to be able to raise the money, to be able to go to this national tournament, which is held down in Florida. And a local business owner caught wind of it, didn't even want the accolades. He just wanted to be able to, as a kid, he recalls when he was unable to do things, primarily just because financial resources were tight. And he wanted to do that and give back. And he was in a tremendous aid in allowing the team to go just by his generosity. And again, he didn't want the accolades. He just wanted to be able to do something good for the community. And it's had a ripple effect, to say the least. So it's even a local story here.
Very cool.
Yeah.
Well, it has certainly continued being a very interesting year in the economy and the market. I just met with my team and we presented the economic commentary to the team. And to kick us off, I said, show of hands, who's been surprised by the market performance over the last 3 months? And everybody raised their hands. Everybody.
Yeah.
So you were one of those
Yes.
in the room. Raised your hand. What has been surprising to you?
Well, and you would think in some ways we wouldn't be as surprised as we are, even just with our research and things. But I think sometimes, and more often than not, the market does things that just kind of catch you off guard a little bit, right? And I think that's how all of the metrics play in, the factors. So for me, I think the biggest thing is coming right out of the volatility of kind of that February, March, kind of going into early April. And then we had all that volatility and kind of all that hustle and bustle. And then now we're kind of like, the market's like, there's tariffs on the horizon. And we've just kind of settled into this space of complacency, which should make you a little bit nervous, I suppose, just in the idea of what's next, because we've kind of all, the market's kind of shrugged its shoulders and really has responded well since.
Well, as I've said, if it was terrible news, because the market had a bear market from top to bottom, top in mid-February, bottom in early April, S&P lost 20%. It was not the only index to hit bear market territory. There's quite a few. If that was bad news back then,
what is changed?
Why is it not bad now?
know.
If anything, I have wondered what Trump's end goal was. I thought it was negotiating. I was hoping he was negotiating completely for free trade. It wasn't fair. Other countries were charging us higher tariffs than we were charging them.
So the true imbalance was there.
Right, and I was hoping he was going for 0 and 0.
Yeah.
That is not what he's going for.
No,
What's he going for?
Yeah, and even the chart that we kind of, we will have up on the screen will show you just kind of where some of the tariff rates were initially proposed, kind of where they sort of were estimated and settled into, and kind of where we're actually seeing them now come to play. Because since the longer the negotiations have been pushed out, the longer that kind of people are kind of coming back with higher negotiations, I would say, on both sides. Is the way it's kind of handled out the longer that the deadlines have been pushed back.
For sure, yeah. Tariffs over the last 100 years, conventional wisdom was, let's push this down to near 0 to 0 to free trade. And Trump's first administration, he bumped it up significantly, but
for that
nowhere
time,
near what
we are now.
Right. Year to date, for what has actually been collected, and again, a lot of tariffs didn't kick in until February or April, but the aggregate weighted tariff rate that we've collected is near 10. And now that we're seeing some of these deals actually be finalized between the UK, EU, some of the Far East nations. I mean, we're seeing tariff rates in the 10, 15, sometimes 20% range, where it looks like his end goal, he wants tariffs. He wants to try to bring jobs back to the U.S., manufacturing jobs that left, to find cheaper labor, to get cheaper prices for U.S. consumers. Now, if you're a business, what do you do in that environment?
Well, and I think that's been the hard part for businesses, right? Is I think seeing where it's going to settle, and maybe that's some of really the complacency is really more of the inaction behind that, right? It's just kind of trying to discern, do we make an investment? Is the capital build, is it time? Because if this does reverse, say with the new administration, roughly 3.5 years from now, if that does reverse, do they make that significant capital build or kind of that, spend, knowing how, or somewhat unknown on how the tariffs will present long-term or indefinite. If that's not a permanent change or a permanent update to the tariff policy, then I don't know if you do make that spend as a business, right? So I think they're kind of sitting on go, trying to make a decision, similar in this sort of low hiring, no firing aspect too, because they've got to know which direction the funds are going. Sure. And so at least in the short term, we know tariffs will be an impact, there's no question, but will they remain an impact indefinitely and permanently?
It's been a long time since I've priced out a manufacturing plant.
Right,
I mean,
that's
what does it
right.
cost?
I know,
$100 million,
and then I was going to
like,
say, depending on the location and size, but you're still in the millions, easy,
And am I going to spend that knowing that this might be a temporary phenomenon?
It'll be a
and even if I do spend that, we've got 4% unemployment in this nation. Who's going to take these jobs?
Yes, that's correct.
So there's still a lot of uncertainty that this complacency is puzzling.
It's almost like creating even more uncertainty, just in the sense of just kind of somewhat sitting on go, but directionally not knowing where to go quite yet. Yeah.
Now, where is investor sentiment and what does that mean?
Well, an investor sentiment is high. So we kind of use the term kind of a frothy investor sentiment. So it's kind of really pushing kind of on really a bearish, so it's a contrarian indicator. And the more you sort of think of an investor sentiment as going high, then we typically see a little bit of caution there as advisors to kind of what we anticipate the market to do after that. Previously, when it's at a lower point, that's typically kind of, again, contrarian thinking. That's more in the bullish territory where we often see a rebound in kind of a market almost in reverse. So right now we're seeing investors really being kind of optimistic, if you will, really, for lack of a better term, kind of optimistic on the market and seeing some of that, especially since April 9th, right? We've had, really, and again, that's where the sort of market kind of saying, oh, tariffs, that's where we have a little bit of caution, right? Because we say our sentiment is a little higher than we would like to see, knowing what often can be on the other side of that frothy investor sentiment.
Well, recent history, there was 2 extreme negatives in investor sentiment, which really kind of fueled some big bull markets. One was COVID, which we absolutely, as a firm, bought on that dip as we were reaching out to clients in real time to make that. And the market dropped 40% in 3 weeks. There was no way that was indicative. It was bad. The market should have dropped, but 40%.
But in a short
we
run,
bought on
nice.
that. And then you fast forward, and that contrarian indicator of extreme pessimism fueled the rally. We had extreme pessimism in March. February, March timeframe.
And then that fueled where we are now.
Fueled this bull market. I almost use the bull market and the extreme optimism as almost like we used a lot of gas to get here, and now the tank is empty.
Yeah, that's right.
Everybody who was going to buy bought in this rally, the fear of missing out. And where do we go from here? There's a lot of unknowns. Now GDP did rebound sharply, but it's been an interesting year. In quarter 1, it was a minus 0.5. In Q2, it was a positive 3. But imports, as people tried to beat the tariffs, front load on their inventories, they bought like crazy. We had the highest import, biggest trade deficit our nation's had ever in Q1, which took GDP, otherwise a low positive, into slight negative. And then there was no imports in Q2. They were selling what was already on the shelves that had not been tariffed. And so I kind of look at it, if you take the average of the two, a positive 3, a minus 0.5, we're cruising along early this year in the low ones, 1.25. And that's kind of the forecast. I mean, but it's not fantastic. It's not something that drives the market up 25% in a few months, which is what's surprising. Other thing that I found really surprising is international stocks this year. I mean, some of the funds on our recommended list that we started buying a year ago because U.S. stocks were overpriced, international stocks looked really cheap by historical comparison. Now, we weren't predicting this huge rally. Some of our international positions are up 25% this year.
They've really done well.
Ask yourself, how on earth does that make sense? We're in a global trade war where Trump's only leverage is if it hurts everybody. It's a lose-lose proposition, but it hurts you more than it hurts us. So we can outlast you in a negotiation. And in that environment, international stocks are up huge. I mean, this is, folks, this is why you don't speculate, why you diversify. Because if anything, if you tried to time this when the global trade war started happening, you would be selling international stocks knowing that they were poised to be hurt.
Well, and even that just speaks to even the diversification of just kind of in the timing within different categories, right? As we're looking at different categories within even the diversification as a whole, if you make extreme moves or chess moves, if you will, within your portfolio, really that can have a significant impact because then you are trying to time it even by category, let alone by fund or company. So,
Well, I do not envy the Fed or Chairman Powell. Number one,
well,
Trump
the pressure.
The pressure, yes.
To get him out of there,
I mean, he's almost fired in the media on a daily basis from the president.
I think between Trump himself, but then also just people vying for his position. I think there's a little bit of that in the background too. As well.
That's probably true. I don't envy their position because they've got a dual mandate, and people. As I've talked to clients, a lot of people don't know what their dual mandate is, but their mandate is entirely inflation and the labor market. They're to stabilize prices. They don't want rampant inflation. They also don't want deflation. They want it in the low, 2% range is their target. And then they've got the labor market. One thing I am 100%, 99.99% certain is that these tariffs are inflationary. We import goods. The U.S. importer pays a tariff, and then they're either going to
absorb it to some level, but most likely pass it on in the pricing.
Well, right. I mean, if it's a 20% tariff,
I'd like to know. They're not going to cut into their margins.
Well, they can't. The average company doesn't even have a 20% margin, so it's going to push you into the negative. So it is coming via inflation to the U.S. consumer. Now, it hasn't hit a ton yet. We've seen slight upticks in inflation up to this point, but that's largely because we've been selling inventory that was imported in the first quarter before tariffs got here. So I know that the chairman and the Fed are worried about inflation. The other piece, we got big news last Friday on the labor market. With the labor market results. So those came in lower than expected, but even more so, they actually revised down May and June for the overall new job creation, sort of a net job creation. So when you're looking at that as well, kind of coupled with that, then you have less going into the workforce. So not even just kind of coming off unemployment, but like less into the workforce, right? So when you factor those in as well, that's definitely a hit to obviously labor broadly, but also within companies as well, because they're in, again, kind of this no hire or sort of low hiring. I mean, there's still a little bit net up for sure, but kind of a low hiring position in. Well, it was a very disappointing top line number for the month of June. It was only like 70,000 jobs, and the revisions down for May and June were almost 250,000 jobs, which didn't take it into negative, but it took it down into the teens, like 17,000 net new jobs in both months, somewhere in that range.
Yeah,
that's
low.
Not good.
Yes, very low.
I think it's
still
almost
net up, but not up much. Yeah,
I think it's almost a sure thing that the Fed will probably have to cut interest rates in September because all eyes have been on the labor market with inflation somewhat in check. But if we see inflation start to rise, and like I said, directionally, I'm as sure as I can be that inflation's going up. The question is how much and how much flexibility will the Fed have to cut rates.
Be able to do that while still controlling.
Correct. All playing behind the scenes as well. We've got the frothy investor sentiment, market rally. Stock market valuations, again, they're not cheap.
No. And I mean, when you look at that and factor that in as well, kind of just broadly when you look at kind of the complacency of the market, but then you have all these pressures that we're talking through when it comes to kind of the fund rates and what Fed policy is going to do. You look at the tariff impact to the individual companies, the low hiring, just all of these things. There does then make you question, kind of going back to that, kind of why I raised my hand, like, I don't know how the market can really be as sort of complacent as it is. However, again, I still go back to, I think the complacency is coming just from the ability to not take action, right? So there's not any immediate sort of quick moves. It's really more of a long-term play on chess moves to see which direction they're going to have to move. So I guess right now they're in there, which way shall we go?
Right,
because they don't want to make any impulse decisions. But I think that's the difference. I think as an investor, we see the market going up, and that's the investor sentiment piece. But I think investors, and honestly, the general sort of, I just think just a general investor or shareholder or just even owners of business, I think everyone wants to see immediate quick action. And the reality is, these things do take time to play out, sort of how the tariffs will officially shake out, and even sectorally, like where individual sectors will be impacted. Some companies won't be impacted by tariffs, really, right? If they're not, in selling products, if they're not importing. So there's going to be some sectors, or just quite frankly, there's not a tariff on that particular product. So I think a lot of those things, them navigating that, also navigating, like we previously talked about with the administration, is this going to be a kind of a 3-year thing that we're going to deal with and put up with in the next 3.5 years, or is this going to be something permanent? So where do we kind of, place our, sort of where that expense line item and what that's going to be?
I certainly wouldn't go all in or go all out.
No, that's right. And then I think we come back to that complacency of just kind of the ability not to take action at the moment in any direction.
Well, the tried and true strategy has always been leveraging the U.S. stock market, utilizing the U.S. stock market to buy companies, to have your share of earnings, and as earnings grow, your stocks will grow as well. Lots of roller coaster ups and downs through that, but through any storm, the market has always recovered. And so our encouragement to you is, you know, whether this past quarter was surprising to you, whether you're fearful about the next quarter, you know, stay disciplined, rebalance, take profits from international stocks and go buy something that's cheaper. Right? Yeah. And if the market falls, hey, then we get to go bargain shopping for stocks at some point.
Right.
The one thing I'm absolutely convinced of is that eventually there will be good times ahead over the long term. And so keep your money in the market. Don't jump off the roller coaster. Dave always says the only ones that get hurt are the ones that jump off the roller coaster. So if you have questions, we are here to help you. So, you know, our website, our phone number, just give us a call, reach out. We would love to have conversations in real time about your specific scenario, whether you're a client or considering being a client. We welcome that. So
thanks so much. Appreciate it.
It's good to chat with you. And until next time, folks.
Thank you.